there's something quite interesting about how everyone's talking about how tariffs are a tax on goods. And I've heard less talk about inflation than I thought I would, Tabo. The reason I'm obsessed with this topic is because I'm watching photos of Americans fighting over cartons of eggs. And here in Mexico, I've had about 3 eggs as a snack, basically. So my conclusion is Mexico must be outstanding at dealing with inflation because we've been relatively unscathed.
And where do you get that idea from?
The proof is in the pudding. The pudding that Americans can't put eggs in, by the way.
I mean, definitely the U.S. is having an issue with inflation at the moment. But is Mexico that good at dealing with inflation?
Well, let's have a little think about the past few years. 1990s, terrible hyperinflation. Fast forward a few years, a decade, and we've had pretty stable inflation throughout. I mean, obviously, ideal, who knows, we can discuss what that means. You're the academic, but ultimately 5% inflation over the course of pandemics, economic crises, turbulent political moments, violence. Isn't that good?
Yeah, the question is that because Mexico is particularly good at dealing with inflation, or is that something else? I don't know. Let's take a look. So, what do we actually mean by inflation? It's very simple. Let's say that whatever you currently buy costs 10 units, and next year it costs 11. In this case, we say that inflation was 10%. And of course, inflation is calculated not just on one thing, but on a whole basket of items that people and companies in a society typically use. Food, energy, telecommunications, clothing, etc. So, studying economics in Mexico at university, I always heard from professors, I heard it from my dad, I heard it from family friends, that Mexico was outstanding at dealing with inflation.
That was something not just me.
It isn't just you, you're right. It is a thing that is said often, it's said in the media, it's said at large. But when I was at school, I remember kind of like just taking that in and accepting it, taking it as the truth because, everyone said it. And even outside of Mexico, one does hear that sometimes. And then I went on and worked at the Mexican Central Bank, and I obviously heard it there as well. But as the years went by and I started sort of seeing Mexico from the outside in, I started to have my doubts. Now, my take on this now is that the claim that Mexico is super good at dealing with inflation is definitely part truth, but it's also part lie. Now, what do I mean by that? Well, first I think we need to determine who are we comparing with when we say that Mexico is really good. Because, I can say that I'm great at playing tennis, and if you compare me with a 4-year-old, I am fantastic. But if you compare me with anyone who actually plays tennis, I'm not particularly good.
Although, don't worry, I am often comparing you to a 4-year-old, so I think we're fine.
So I'm fine. I'm in the clear right now.
Yeah.
Now, when we talk about the Mexican economy, obviously you can't compare Mexico to the US, to France, and much less to the super rich like Norway or Luxembourg. They just play a different game because of the way their economy is structured, because they're much richer. And obviously, you're not supposed to compare Mexico with Malawi or Bolivia, because Mexico's a lot richer than Malawi and Bolivia. So who do you compare with? Well, economies that are roughly the same, in the same sort of league in terms of size and level of development. Obvious names are Brazil, Argentina, Peru, Colombia, outside of Latin America, Turkey, South Africa, these kinds of countries. And the part truth that I mentioned is that when you compare inflation in Mexico over the past 30 years with inflation in these countries, Mexico is a little bit better, or actually markedly better than these countries. Better how? Well, it's very simple. Two things that you want to be looking at are how high the highs are, like how much inflation is there on a bad year, and how much volatility there is. Are there tons of ups and downs?
Could you actually tell us a bit of what inflation has actually been like in Mexico over the past, say, 10 years? Because what is a good inflation rate, and how much has Mexico had over the past decade or so?
It's a good question. So a good inflation rate depends very much on the type of economy that you are, how big you are, how developed you are. So Mexico tends to aim for around 3 to 4% every year. And that makes sense for Mexico because Mexico is a relatively rich, relatively developed economy, but not super rich. So for example, Switzerland, which is super rich and super developed, aims for like 1.5% a year, right? If you're much poorer and therefore you're growing, it's more likely that you'll grow more aggressively and with more ups and downs, then you might have a higher inflation, and that might be acceptable. So over the past 10, 20 years, Mexico has aimed for this 3-ish% plus or minus 1%, and it has fared quite well.
So there's something interesting here. Why, briefly speaking, I know this is the issue with talking to economists like yourself, why do we want prices to go up? Why not aim for 0%?
So that's actually a question I had for years in school, and no one answered it for me. They just kind of like said a little bit of inflation. This is the target inflation. And I was always astounded by that. The reason is that inflation is basically determined by supply versus demand. So if there's too much demand relative to supply, then prices go up. Now, this is something pretty standard. If we all want the one piece of cake, then the price of that piece of cake is going to go up and go to the highest bidder. So in an economy that you want to grow, you ideally want to always have a little bit more demand than you have supply. You want to err on the side of too much want to buy, want to do, want to invest, than too little. Now, of course, you don't want to have way too much demand relative to supply because then you have way too much inflation. And if you aim for zero inflation, you can err on the side of constraining growth too much, which if you're already a very rich country, that's fine. It's preferable to limit price growth because you're already rich. You don't really care about the growth quite as much. But if you're not that rich, like Mexico, it's better to have a little bit of inflation, but keep the economy growing.
And so has Mexico actually stayed on track over the past few decades on this 3 to 4% inflation rate?
It has. And I think this is what we can compare with the likes of Brazil, and that's a good comparison to make because Brazil is another country that does well in dealing with inflation. This is the key part. Mexico is, even when people say that Mexico is amazing at dealing with inflation, it's important to put it into perspective. Other countries are good at it as well. Just Mexico seems to be slightly better. When you look, for example, at Brazil, Brazil has a slightly higher inflation target than Mexico generally, which makes sense because it's a slightly less developed economy. And they tend to do quite well, but they have a lot more volatility. They have highs that are way higher than the target more often than Mexico does. So Mexico tends to aim for 3%, 3 to 4%, and it does get the occasional 5%, and it has had an almost 9% and an almost 7% in the last roughly 10 years. Whereas Brazil, over the last 10, 15 years, has been close to its target, but it's had several 10%, 12%, 9%, and that has happened way more often than it has happened in Mexico. So basically, the spread between the target and reality tends to be bigger in Brazil, and it tends to be big more often than it is in Mexico.
And, okay, my job throughout this conversation is going to be the layman. How would that change a person's experience on their day-to-day? So Mexico's got 5%, Brazil's got 12%. What's the difference between the experiences of a Brazilian and a Mexican in those contexts?
So basically, inflation means prices went up, and no one likes prices going up, right? So at a macro level, at the level of the people who plan how the economy should grow and how it's going to grow, they want a little bit of inflation because that means growth for everyone. But me, an individual, I want zero inflation because that means if I get inflation, things are more expensive. So obviously, if Brazil has 10% inflation, that means everything is 10% more expensive. And the problem is not only that there is inflation, because as we've said, we want a little bit of inflation. The problem when the comparison between Mexico and Brazil is that what's concerning is when you have much more inflation that had been planned for. So if Brazil aimed for 5% and then it gets 11%, 12%, that means that people cannot plan. And that's a problem. Maybe not for me, because I'm not planning what I'm going to buy next year today. But if you're a company, that's an issue. Because you're forecasting your purchases for next year already today. And if you're forecasting prices, whatever price you have today, plus 5%, but then reality ends up being plus 12%, that's a 7% gap that you need to make up somehow. Now, so far we're seeing that, yes, Mexico is slightly better than Brazil at handling inflation. You can say that for many comparable countries like Turkey, like Peru. Let's not say Argentina because it's much, much better than Argentina for a variety of reasons. But the question here is, can Mexico take credit for this? Because Mexican economists, Mexican business people are very proud of Mexico's ability to control inflation. Well, is it Mexico that's doing this, or is it thanks to something else? And I think here the answer is Mexico can't take a ton of credit, at least not for this part of controlling inflation. When we say that inflation is basically the mismatch between supply and demand, part of the reason why Mexico has such a good track record with inflation over the past 30 years is that over the past 30 years, it has become very heavily integrated into the world economy. 40% of the Mexican economy is based on exports and imports, which means its supply chains are connected to everyone else around the planet. Most importantly, those supply chains are connected to the richest countries in the planet. Now, why does that matter? Well, being integrated to the global supply chain is good because let's say that for whatever reason, the plant in Mexico that you usually get your stuff from can't produce enough stuff this year. Well, in a closed economy, that would create inflation. There's not enough supply relative to demand. But if you are integrated into the world economy, well, you just call someone up in Czech Republic and Japan and Korea and see if someone can sell you the piece. Now, it might be a little bit more expensive than you aim for, but it won't be super expensive.
This is where it's a really interesting moment to focus in on the Mexican government today, because when we talk about this left-wing government in office at the moment in Mexico, the great worry is as soon as they say industrial policy, they assume we're going to get the old-fashioned way of doing things, which is closing down the economy, making it completely self-reliant and just having state-run companies run everything, which, as we've discussed in a previous podcast, can be a disaster because it's low-quality products with no incentive to be better and often very expensive stuff. And as you say, when the factory breaks down, suddenly prices go up. In this case, and I think the Mexican government has learned from the lessons from the past, so I'd like to argue this makes Mexico good at dealing with inflation, at least conceptually, which is Mexico has got an industrial policy at the moment, but it's very much aimed at what you're saying, which is to continue to be open to the world market, but in spaces where you can't import something like cell phone signal, for example, the government's coming in and competing on the active market. So we have got a strong state coming in and competing, but they're not competing. They're not coming in to monopolize everything. They're coming in to become competitors. And that should be bringing prices down, which means inflation should be coming down. Is that the case, Tavo?
I mean, on the side of continuing to be integrated into the world economy, that's definitely true. And I think it's definitely true that Mexico has learned its lesson. Even a government with a school of thought that might suggest wanting to close down the economy, even that type of government hasn't even considered putting that idea on the table. And that will definitely help with inflation. As to what will happen with the government meddling or being part of the economy, however you want to look at it, that remains to be seen. There's examples in all directions. But in general, it shouldn't make things worse, that's for sure. The other thing to consider is, on the side of being integrated into the world economy, is Mexico trades primarily with the rich, as I said, and primarily with the US. And one of the benefits of trading with the rich is that the rich consume a lot, and they consume constantly. So it's a lot easier to forecast what's going on. It's a lot easier to trust that you're going to have this demand and this supply over the years. Whereas if you were trading more with poorer countries that are more prone to volatility, then you might therefore be prone to more ups and downs in supply and consequently in inflation. It's important to note that this is not just about the rich economies, this reduction in volatility. And this applies for inflation globally as well. The world has been on a path of fewer crises and on a path of less inflation pretty much everywhere. There are, of course, extraordinary cases like Zimbabwe, like Venezuela, like Argentina. But for the most part, the world over the past 30 years has seen less volatility. So GDP tends to be pretty stable, GDP growth, and less inflation.
Is this not perhaps, and I fear to say this, is this not perhaps one of the benefits of the Washington Consensus and neoliberalism, this vision to use technocrats to the benefit of these very clear technical metrics, the masters of the universe, the world economy coming in and helping stabilize these prices across the past 30 years?
Absolutely. And we'll get more into that in a minute. But definitely, this is all of these practices of being well integrated into the world economy, of the way in which Mexico deals with inflation more broadly, which we'll talk about in a sec. That is the product of the Washington Consensus, 100%. And that is an unequivocal win of the Washington Consensus. There are, of course, failures to that, as we've seen in 2008. And anyone who's and listeners might say about my comment on the world becoming more stable, well, 2008 was a great crisis, but we must put things into perspective. The great crisis of our times, there's probably a new one coming up, but so far the great crisis of our time was the Great Recession in 2008, and there the US saw a fall in GDP of about 5%. 5%, think about your own income. If your income falls 5% this year, you won't go hungry. You likely won't lose your house. Things will continue as they were. You might not buy a new car, that's for sure, but everything else will continue just fine. If we look at the Great Depression, the US lost 25% of its GDP, and it took a very long time to recover. Think about your own income. If you lose 25%, you might go hungry. You might lose your house. So the fact that the great crisis of our times was only a 5% fall in GDP shows just how much more stable the world has become. And consequently, that helps inflation to be much more stable. In the case of Mexico, for example, when the Great Recession came in 2008 and the US economy falls by 5%, well, that should technically affect Mexico, right? Particularly when so much of Mexican exports go to the US and so much of the Mexican economy is exports. However, 5% isn't that much. So when you're only talking about 5%, it's relatively easy to offset that loss in demand with internal demand. And that's exactly what Mexico did around 2008. Yes, there was this big hit. No one wants to lose 5% of their income. But Mexico could just spend on building things like highways, which it did. It just went on a highway building spree. And that managed to account for some of the loss in demand and consequently helped to control inflation over those complicated years. Now, some listeners might think, well, you're talking about a very globalized Mexico, a relatively rich Mexico, but not all of Mexico is that way. What happens to the poor? We've spoken in the past of the part of Mexico that is very poor, the part of Mexico that isn't as integrated into the world economy. Surely they're affected a lot more by these things. Yes and no. The reality is that this other Mexico, we always talk about the two Mexicos. Well, this other Mexico, this poorer Mexico, follows much more sort of subsistence practices. In many cases, they grow a lot of their own food. They still trade a lot between them. It's a very different reality. And you might say, well, yes, but you can't grow your own oil. You can't. But, and the Mexican political economist recently published a piece on this, talking about how 30% of energy in Mexican households comes from wood burning, right? So you can't grow your own oil, but you can grow your own trees. And of course, trees technically have a price. But in a country that has one of the largest set of forests in the world and a severe lawlessness problem, a lot of this wood burning comes from illegal felling of trees. So a large chunk of Mexico can just sort of live aside from this inflationary reality.
It's an interesting case study, though, wood. I've just doing a bit of the research that we did for that piece. In the past 15 years, there has been an increase in, I love it, the way they define a certain amount of wood for burning is a task, una tarea de leña, a task of wood. And a task of wood has gone from 300 pesos back in 15 years ago to about 1,000 pesos. So as you say, right, the situation that Mexico is going through with deforestation, with the increase in prices in oil, does affect the way people buy even the most, we'll call it local goods. But your point is well taken. I just wanted to mention the task of wood.
But we'll come back to the ecological problems of Mexico because I think they're very relevant in the context of inflation. but I'll get to that in a bit. Now, we've talked so far about how inflation is about supply and demand. That's great. Mexico controls supply and demand, and a lot of that is not thanks to anything that Mexico does other than a broader, long-term policy of integration into the international economy. But the other very big part of inflation is around expectations. It's about setting expectations and meeting expectations. And this is where the juice is. Let's remember that prices aren't just set by, God. Even in communism, where they were technically set by, a central planner, it's ultimately people in stores that need to set the price. And it happens it has happened many times where the price set by a central planner doesn't match reality. You get, sure, the official price, but then you get the real price, which is the black market price. If prices are ultimately determined by individuals, store owners, by people selling their work, the expectations that people have about prices going up are super important in determining whether prices actually go up. And it's one of those like chicken and the egg things. But it often happens in inflationary spirals, that is when inflation keeps going up and up and up, that it all departs from people believing that there will be inflation. That's a very simple idea where, I don't know, a carpenter thinks the prices are going to go up. So when they go and offer their work, they say, I'll charge a little bit more. But the person they're selling their work to is a store owner, and they're being charged a little bit more. So they'll say, you know what, I'm going to increase the price of, I don't know, rice a little bit more, but more than the carpenter increased the price on his services. But then the plumber sees that the price of rice went up. And then everyone starts doing the same thing at a whole economy level. It gets completely out of hand. So the big role of governments in controlling inflation is managing these expectations well. And in that, Mexico has done very well. The way in which they've done that is through a variety of tools and actions, the most important of which is probably the independence of the Mexican Central Bank, which happened in the mid-90s.
Aha, finally got to it. I thought, given that you'd worked there for a little while, that we'd be going on and on about the Mexican Central Bank, how wonderful it is, how independent it is. I mean, to be honest, it is a sight to behold physically. It's in the center of Mexico City next to the beautiful Palace of Fine Arts, Bellas Artes. And it's also consistently been one of the most admired and independent organizations in Mexico. Even López Obrador, who loved thrashing and destroying independent, autonomous organizations, was actually really into the independence of the central bank, understanding that inflation can destroy a country and, more importantly, a government. But we've reached more or less halfway through this podcast, and you've barely mentioned the central bank. So I'm keen to hear what the Mexican central bank actually is and does, because we've talked about so much almost government supply side stuff, like government intervening, markets, but there's something weird and mysterious about central banks. So I'm very keen to hear what you've got to say about them.
So the Mexican central bank, as most central banks in the world, a very significant chunk of their work is everything we have been talking about, which is controlling that supply versus demand. They play with the markets in a way. So we've been hearing this a lot in the news pretty much nonstop since 2007, that central banks are going to raise the interest rate, lower the interest rate, raise the interest rate. Well, that often comes from the central bank, in most economies at least. And in modifying these interest rates, what the central bank is doing is trying to control how much demand there is. Basically, if you increase the interest rate, then you slow down the economy a little bit because it's just very expensive to take loans, so everything slows down.
So wait, could you explain that a bit more? A central bank says, this is the interest rate. What gives them the power to say that? In my mind, the central bank just basically says, this is the base rate, right? So if it's 1% interest rate, the central bank, which, has the money in a vault, metaphorically speaking, can lend big institutions that borrow lots of money at that rate. And then institutions can go out and double that and say, we'll charge you 2%. And that's where the market comes back in. But the sort of like stabilizing force, the organization that says this is the amount of money that you should be borrowing at the sort of like lowest rate, or is this, and then the market can take care of the highest rate.
Yes, that is essentially how it works. In practice, no one really borrows from the central bank in bigger economies and more developed economies as much. It's very much it's actually called a lender of last resort. You don't want to be asking the central bank for money, because if you are asking the central bank for money above a certain threshold, you're basically telling the central bank, I messed up. Okay, there's an issue. I need cash.
A
That
bailout
leads
from
to
dad.
exactly, but it's the step before the bailout. It's the kid who calls home. Is like, oh, could you just help me out, Dad? It's like, help you out? Why? What's wrong? And then Dad's gonna drive up and trying to figure out what's going on, and that's sort of why banks don't try not to borrow from the central bank quite as much. But the logic is correct. The central bank determines a base rate, and in economies where the central bank is respected, which is a key component and not an obvious one in many places, banks follow suit from this interest rate that the central bank determines. Now, that's the whole, like the more technical economic financial side of what the central bank does. But as I said, a huge chunk of what they do, probably after you've done all the basics of playing with the interest rate, the heart of what they do to be very good as central banks is about setting expectations. It's very much the idea of a teenager with a curfew. If you have a teenager who wants to go out clubbing and they say, I don't know, I'm going out, and mom and dad say, okay, but just be back by, I don't know, 12. It's a very boring household. Be back by 12. And the kid just shows up at 3. Well, the kid, and there's no repercussions to that, then the kid is just going to continue to do this, right? So the role of the central bank here is very much like the parents. It's kind of saying, well, the curfew is 12. I can allow 12:30, maybe 1. But if you go beyond that, there's going to be consequences, right? Now, that sounds relatively obvious, but you don't want to fight with your kids, you want to be a cool dad, whatever. And you let things slide a little bit, and then you just lose control. Same idea. Now, what the Mexican central bank has been particularly good at doing is setting an expectation and then doing a ton of work to meet that expectation. It says we're aiming for 3, but we're going to allow all the way to 4. And then every quarter they go out and say, this is how we're doing. They're super transparent. They say, this is how we're doing. There's problems here, but there's no problems over here. This should be resolved quickly. We're going to have to step in to resolve it, but it should be relatively hands off. And by giving all of that clarity, by stepping in but not overdoing it, by keeping everyone well informed, the inflation actually does meet its targets more or less. And then the next year, everyone says, oh, but the central bank did what it said it was going to do. Consequently, I can assume that the inflation will be what they're telling me it's going to be. Back to the story of the carpenter, where the carpenter and the shop owner and the plumber, everyone says, oh, okay, there's not going to be more inflation. Fine, so I won't raise my prices.
This is where trust is a weird asset that I think everyone in Mexico, after years of struggling with inflation, and Latin America, I think broadly, have come to understand, which is trust is probably the most valuable asset because you can lose it and never get it back. Because the way, going back to the sort of the household example, this sounds like a family with, parents, the responsible parents, who also have an understanding that they can't hit their child and consequences can't be that aggressive because they'll call child services. Because you talk about the central bank being transparent, being honest, trying to, do things the right way and working constantly towards this. But what does the central bank actually do? Is it just literally on trust? Or is there a nuclear option for the central bank?
The reality is that the bulk of it is trust. And I think a lot of things like the judicial system, it all comes down to believing a story that we're told. The money that we use to buy stuff, it's just a piece of paper. But we use it. Well, we agree to accept it because the central bank is back there saying, no, trust me, this is the good one. Okay. So a lot of the system just kind of depends beyond just the central bank. The system that we live in capitalism and in democracies depends on believing the story we tell ourselves. And it's all about trust. If you tell me you're going to do A and then you do Z, I can't trust you. And then I can't believe the story. And so the story doesn't work and everything kind of falls apart.
Which is why it's so important to have independent central banks if you're going to have them in the end, because they're not politicized, they're not beholden to the political to's and fro's of elections and of politicking. And so, weirdly, this elitism, and this is why it's so important that it came out of neoliberalism and the Washington Consensus, it actually really works in this case, this elitism, distant watching of the economy far away from the people, something that this government really doesn't like on a rhetorical sense. They want every aspect of the Mexican economy and society and politics to be as close as possible to the people, which sounds great, unless you run a titanic and incredibly technical institution like the Bank of Mexico, where actually you can't really explain in a simple slogan what you're doing, but what you're doing is being observed every second of the day, every day of the year, so that the economy doesn't collapse. So it's a fascinating situation to be in.
That's a great way to put it. And yes, that I think one of the great reasons why inflation is ultimately well controlled in Mexico is the central bank, and it is the trust that we have in the central bank and the mature institution that it has become, and the fact that it is believed in and supported, and its mission is supported by all types of parties, by all types of government, before democracy and in democracy. Okay, so the independence of the central bank came in 94. It really gets going until 95. And that was before Mexico was a democracy. And then the democracy came and a new party came, and the institution continued to be respected. And then the PRI came back. The PRI is the party that was in power from the 1930s all the way to the year 2000. It's the party that's in power when Mexico has a huge inflationary crisis. And when they come back to power, there's fear, there's even rumors that the PRI is going to go back to its old ways and the Mexican central bank might not be able to hold its ground anymore. But the central bank is respected right through this presidency.
And then those exact same rumors revive when, in 2018, the left-wing party, Morena, with López Obrador at its head, comes to power, very interventionist, and yet something fabulous happens, which is he does appoint a bunch of very respected but clearly left-wing economists who, as soon as they go into the central bank, become enormously independent, almost to the annoyance of the president, which I think speaks volumes of, maybe if you want to be negative about it, the corporate nature of these organizations, right? They're elitist, they're far away from the people, and also they're not loyal to the people who appointed them. But if you want to be really positive about them, it shows how there's a clear understanding that the bank needs to be independent for it to work. And so no matter who you are, no matter what your ideology, as soon as you walk into the bank, you become purified of political affiliation and you simply work for the institution.
Exactly. And I actually had a Twitter exchange with one of the people who AMLO nominates to become the new undergovernor, one of the new undergovernors in the Mexican Central Bank. I remember having a back and forth about ideas that were very sort of fringe, very not accepted in the classical view of, well, the contemporary classical view of how a central bank should be governed. And yet when this man came in as undergovernor, he didn't bring these ideas up once. As you say, he stuck to the party line, but to the Mexican Central Bank line, and defended the independence and defended the way things were done. And as you say, to the annoyance of AMLO, everything continued to run exactly as it always had.
Again, it's a tribute, one of these rare tributes to the neoliberal ethos, which is the fact that it's a very keenly sort of scientifically based economic organization, means that there is, I think, ideologically something quite strong within all the people who go into it and that go in and they have this mission. Because you could say that there is a similar corporate nature to the Supreme Court, for example, which the Mexican president also appoints ministers to, and the judicial system. And that is a space that we have seen politicized much more clearly. We've got a whole bunch of articles about the judicial reform, which is and we're finally getting the election, which is coming up on the 1st of June. So follow up on the Mexico Political Economist to really see what's going on there. But the basic point is, even though some of the ministers López Obrador appointed back in the day, some of them were independent, increasingly they were completely dependent on the party line, which really sets the Supreme Court as a now politicized entity. It sets it apart from the central bank, which continues to be a bastion of independence.
I think something key here is, yes, we're comparing two institutions here, the Supreme Court and the Mexican Central Bank, but we need to talk about individuals inside of these organizations and the role that they have in creating the institution. Because in that, the Mexican Central Bank has particularly outdone itself, whereas the Mexican Supreme Court was quite famous for being very corrupt or for having very corrupt members at different instances. There is something where Mexico really stands out more than any country in the world, even the great and rich countries of the world. And that is the sort of masterminds of financial economics that Mexico has had in power, particularly focusing on things related to inflation. There is an organization which most people have never heard of, which is incredibly important, which is called the Group of 30. The Group of 30 is a private organization made up of the who's who of international finance experts. The members that it includes are the greats, Ben Bernanke, Janet Yellen, Mario Draghi, the creme de la creme of international finance. As I said, there are 30 members. Of those 30 members, 3, so 10%, are Mexican. A country that represents less than 2% of the world economy holds 10% of the seats of the most prestigious group of international finance economists in the world. And all those 3 people worked at the Mexican Central Bank. Not only worked at the Mexican Central Bank, but 2 of them were the central bank's governors, Guillermo Ortiz and Agustín Carstens. And the third, Ernesto Zedillo, was the president who is basically the first president to have to deal with an actually independent Mexican Central Bank. It was made independent in the presidency prior to his, but he's the guy who has to actually deal with the reality of what that looks like and who really supports it actually becoming fully independent.
I kind of love the idea that the answer to the question, why is Mexico good at dealing with inflation, may all come down to, sure thing, the independence of institutions, a good fiscal policy, etc. But actually, it might just be a country that empowers its economic nerds in a certain way and allows them to flourish.
I agree partially, but it's not just nerds. That these people are quite extraordinary. So Ernesto Zedillo, though he is controversial for some people, Ernesto Zedillo is a member of the Elders, the group of people, this organization created by Nelson Mandela. And so Nelson Mandela believed that Ernesto Zedillo was this sort of next level, the elders of the world kind of individual. And in many ways, he was. It's not just being an empowered nerd, is people who have done much more than that. They could have been very corrupt, and they weren't. They could have focused only on themselves, and they didn't.
It's a weird situation to be in because it leads us back to this point, which is it's all very fragile, actually. It's these institutions that seem very strong, and the reason I guess we cloak them in the grandeur of massive buildings and marbled halls is almost to present a fig leaf to the fact that this is all based on trust. It's all based on these people who, fine, know a lot, as we said, right? They're nerds, but they're also people that other people feel they can trust broadly. And I think maybe that's an interesting place to conclude this discussion, right? It's Mexico's very good because it has the institutions, but the only reason it has the institutions is because Mexicans and the world trust them.
Definitely, but I'd like to actually end on a slightly different note. Because so far we've talked about how great Mexico is at inflation. And as I said, Mexican business people, Mexican economists will tell you this ad nauseum. But I always have had a different question. So I'm going to tell you a very quick story. It's going to sound very not relevant, but I promise that it is. I remember when I was about 18, I was in Cancun with some friends and we went partying. And as evenings in Cancun tend to be, it was very fun, but very rambunctious. And we had a curfew, 3 a.m., so not a boarding house, this one. We had to be home by 3, and we were home by 3, to our credit. However, what was not great is that when we got home, we were, most of us, completely hammered. We'd lost a member of the crew. We were escorted home by security. When my friend's dad came out, he looked at us and said, what the hell is going on? Understandably. And my friend had the brilliant response of saying, it's 3. You said I should be home at 3, to which he was very upset.
I love that.
And the reason I think this is relevant is that's the way I feel a little bit about inflation. Mexico is a country with ecological problems, serious ecological problems, as you mentioned, massive deforestation, security problems, poverty problems, inequality problems. I can go on. And Mexican economists won't shut up about how great the country is at dealing with inflation. Well, I feel like dealing with inflation is kind of like meeting the curfew. Like, yeah, you're a G20 nation. You're supposed to be good at dealing with inflation. Do you want a pat on the back? Like, sure, do your job and then deal with all the other stuff as opposed to just fixing this one thing and nothing else.
And also, given the fact that the other real world implications of deforestation, climate change, violence can have enormous effects on the economy downstream, making the whole point of being very good at keeping to the curfew a moot point if ultimately you've been arrested and the only reason you've arrived before 3 a.m. is because you're in handcuffs and at your parents' door.
And that might be a bleak ending to this podcast, but I think it is a bit of a reality check. Mexico is very good at dealing with inflation, and Mexico is very good at doing a lot of things. However, it faces a constant problem of being very good at some things and sort of pretending that it doesn't have to deal with all the other things that arguably in the long term will be more important.
The sort of things that we'll probably be covering in future podcasts. So we'll see you then.
Until next time, I'm Tavo Figueroa.
And I'm Alex Gonzalez-Hormerod.
And this is Mexico, the podcast.
Every 2 weeks, we'll be talking about Mexico's politics, economics, and all the other things that make this enormous and wonderful country tick.